Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. Well, we got what we wanted, a new high in the cannabis ETF MJ. That's the symbol. So let's get into it. My rating here is changing from buy back to neutral after a 13% gain in, I don't know, 2 days. I'm happy with it. Here we go. This is the daily chart of MJ. This goes back about 6 months. They call it daily because each one of these bars represents a day of price action. So when we were coming down here into the low and we bounced up and I could see a five-wave advance, I knew that we'd get a three-wave correction. And so this is when I was looking to get involved. So this is a this is an ETF that's been in a decline for several years. I think the high was like 350 and it got down to 17. And so we one of the tools that I'm going to use that I use in my toolbox is the Elliott wave theory, which believes that trends or cycles go in waves of five, and we saw a five-wave decline into the lows. And I suggested we'd have an A, B, C correction. And I think we're pretty close to that being complete. And so it's time to get off this train for a little bit. And so this was the A wave up, the B wave correction, and you can see here one, two, three, four, five, a little five-wave advance to start off the C leg up. And then we got a three-wave correction, and that's where I wanted to do a buy rating. I wanted to get in front of this third waves because what we know about third waves are the most powerful. They go the farthest, they're the most profitable. And so we had one, two, three, and then a down bar four, and then a five. So this completed our third wave. We knew it was a third wave because it broke outside of our bullish channel here. Uh, and we got a really strong confirmation on our relative strength index chart, hitting much higher highs here, confirming this high and the underlying oomph and power of the advance, as you can see from these volume bars. And so I knew that another higher high was probable. So we got a fourth wave correction and a consolidation, and it worked off the overbought condition. And I said, you know what, I'm going to get in here. So that was on 8/20, on August 20th. We went to a buy again. That was great. So got back in on the 20th, and here we are on the 25th, a couple trading days later. I thought we'd get a higher high. We did. We're setting up, and I thought we'd get a negative divergence. And if prices stop around here, we will have a negative divergence here with a lower high on our relative strength index. So on this last leg up, the underlying intensity was not as great. And so it's flashing a caution sign, beware, a change of trend could be coming. And so I'm going to go to neutral here. And after a 51% gain, the first leg, another 13 on the way up here. And we're going to wait and see. I want to go to a longer term chart. This is a daily chart. Each one of these bars represents a day. Now we're going to go to a weekly chart where each one of these bars represents a week. And that prior chart only went back 6 months. This goes back, I don't know, 4 or 5 years. And I'm not showing the first leg down, the second leg up, the big third wave down. We knew this was a third wave by how dramatic it was. And if you were short, you did really well here. Here was the fourth wave correction, three-wave correction, and then we got our fifth wave down. And so when we hit this lower low here and we got a higher low on our RSI, it was flashing a caution sign, beware, a change of trend is coming, that we were going to get this ABC correction at the least. And then we'd go from there and figure out whether this is really a change of trend or if it's just a corrective rally. So right now we don't know. We only have one, two, and three, which I'm labeling A, B, and C, because until we have a five-wave advance, this is just a corrective upswing after this huge downswing. So uh, another reason why I want to get off of this is that you can see this cluster of moving averages is coming together. This is a la Tom McClellan, very good market technician. Some of you are probably familiar with him and his father, Sherman McClellan, who invented the McClellan oscillator, which I look at still today. I think it was created in the 70s. Um, anyway, this when these clusters come together like this, two things can happen. A type 1 convergence, prices can sit here while the moving averages come up and challenge that, and then that will tell us where to go from there. Or a type 2 convergence where prices come back to the convergence. I see that a lot. And this is a bullish rainbow convergence because the price is above the cluster of moving averages. So if prices do a type 2 convergence and come back to this and hold, it promises a higher high. And if we get a higher high, then we all of a sudden we have a five-wave advance, and it tells us that, the trend here has changed from down to up. But once we get a five-wave advance, what do we get? A bigger A, B, C correction that would correct 33 to 50 to 786 Fibonacci retracement levels of this entire advance. If that happens, we don't know that yet. We're taking this one day at a time. So I'm hoping we get a retracement back to this cluster of moving averages and it holds, and I can jump on that again. So I think we got an action plan here, and we're in good shape. The first leg up 51%, second leg up 13%. And I don't even know, well, I think it's maybe a month or so. So that doesn't always happen, but it's nice when it does. Please like and subscribe. Tell your friends and neighbors. Uh, please feel free to make comments, to make suggestions or things you'd like to see, formats, any of those things is fine. I want this to be more educational. I'm not making any money doing this. I really want to pass along classic technical analysis. And so thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Have a great day. Adios.